Welcome back to Teshkid FX for another Polygon Matic price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Polygon Matic chart, which at the time of this recording has lost a significant high at around the $1.3 mark. We have also lost the 20-day MA here on the 4-hour chart, which is now acting as resistance. We have also continued to obey the Elliot structures, where we have fully maximized our minimum target areas to the lower side in the formation of these larger Elliot wave count 4, and I believe that whatever we are seeing at the moment is the start of this massive bounce to the upside in the formation of this wave 5. And before I get further into the technical analysis and also give you my breakdown targets here on the Polygon Matic chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that after making our low at around the $0.74 mark, we started this massive bounce to the upside, obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in yellow, having that as the first wave to the upside, giving us a peak at around the $1.05 mark before we started this corrective structure in the formation of that wave 2. And after seeing the low for that second wave, we started another massive run up to the upside in the formation of this wave 3, giving us a peak at around the $1.3 mark. And after seeing the high for that wave 3, we started a corrective structure in the formation of this wave 4, and using the Fibonacci's, connecting them from the low of the second wave to the high of that wave 3, that gave me a minimum retracement area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5, which is an area that lies between the $1.1871 mark and the $1.1361 mark, and that is the minimum that I was expecting that fourth wave to the lower side to do, which is an area that we fully maximized. And after fully maximizing it, whatever we expected next is the start of that massive run up to the upside in the formation of this wave 5, and I believe that is what we are seeing over here. And in the formation of that wave 5, which is an impulsive wave, we also expect to see a 5-wave structure in formation within the formation of that wave 5, where I'm expecting this wave 5, which is a fractal wave within the formation of these larger Elliot wave count 5, to fully maximize our minimum target areas. And I believe we are seeing such a scenario over here. And if I zoom in, you can see that after making our low in the formation of that wave 4, we saw that bounce to the upside, giving us a peak at around the $1.57 mark in what I'm terming as that first wave to the upside. And after seeing the high for that wave 1, we started a corrective structure in the formation of this wave 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area in the formation of that higher Elliot wave count 2 between the fib level 0.5 and the fib level 0.78, which is an area that I have marked here on the charts, which is an area that you have also fully maximized between the $1.3551 mark and the $1.2317 mark. And after fully maximizing this target area, whatever I'm expecting next is a reversal to the upper side, continue gearing up in the formation of this wave 3. And for that move to also play out, I'm first expecting to see a break above the 20-day MA, and the moment we manage to break above the 20-day MA, then we can have the support that we need for us to continue gearing up, and also see a break above the key significant high at around the $1.3 mark. And once that happens, then we can continue pushing higher, see a break above the wave 1 high, and also fully maximize our target areas in the formation of that wave 3. And assuming that we are not going to see one more new low in the formation of this wave 2, we can sketch out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, and that gives me a minimum target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.87897 mark, and that is the minimum that we can expect that wave 3 to the upside to do. But what happens in case the breakdown continues and we continue holding below the 20-day MA? That is another thing that we need to have in mind, where we have the chances of losing other key areas on the Fibonacci's. And if I connect the fibs once more from the low of the first wave down there to the high of that wave 1, that gives me an area on the Fibonacci's that we need to continue holding above, which is the fib level 0.88. And the moment we lose that key area on the Fibonacci's, which lies at around the $1.1919 mark, that will be putting a major challenge on the formation of this Elliot wave structure that I have right here, and there are chances of seeing a 100% retracement in the formation of this wave 2. And in case such a move plays out, then this Elliot wave structure that I have right here will be invalidated. And the next move that is the different Elliot wave count that we can have over here is stemming this as the first wave to the upside, then a wave 2, then the high that we made at around the $1.57 mark is the high for that higher Elliot wave count 3. So at the moment I'm having the wave 3 high at around the $1.35 mark. So in case we see a 100% retracement over here in the formation of this wave 2, we can term the high that we made at around the $1.57 mark as the high for that higher Elliot wave count 3, and whatever we are seeing at the moment could be a retracement in the formation of that wave 4 before we can continue gearing up in the formation of that wave 5. And if that is the case, we can also have a different target area in the formation of that higher Elliot wave count 4, and that is in case we continue seeing the breakdown to the lower side in what we could term as the formation of this wave 4, where I can connect the Fibonacci's from the low of the second wave to the high that we made at around the $1.57 mark, giving me a minimum retracement area between the fib level 0.5 and the fib level 0.618, which lies between the $1.24 mark and the $1.1643 mark, and that is the minimum that we can expect that wave 4 to the lower side to do. And in case that plays out and we see the low for that fourth wave, then we can expect our massive run up in the formation of that wave 5. And these fractal waves that you are seeing over here are fractal waves to complete an even larger Elliot wave count 3 here on the 4-hour chart, which is giving me the long-term scenarios that I'm expecting to play out. And if I zoom out so that I can give you the long-term scenarios that I'm expecting to play out here on the Polygon Matic chart, you can see that after making our lower low down there at around the $0.32 mark, we started this massive bounce to the upside, obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in yellow, having the wave 5 giving us a peak at around the $1.3 mark. Then we saw a corrective structure in the formation of that wave 2, and I'm expecting this massive run up in the formation of this wave 3, where I can have my minimum target areas by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, and that gives me a minimum target area at the fib level 1.618, and that is at around the $2.3585 mark, and that is the minimum that we can expect that larger Elliot wave count 3 to the upside to do. So that is what I'm expecting here on the short-term scenarios and also on the long-term scenarios. And also taking a look at the indicators on the RSI, we are trading at around the 33 mark, meaning we have massive room for us to fully support higher prices in the formation of that higher Elliot wave count 5. Also taking a look at the MACD, we have been able to print a bullish cross, but we are seeing a bit of a sharp decrease in the selling, in the buying momentum, meaning soon we might be able to print that bearish cross and also give us a bit of a bearish movement on the charts. So let's be patient and see how that plays out, and I'll be keeping you updated.